Hi, this is June from Turning Point Life Investment, and this is your weekend market analysis for the week ending in October 17th, 2009. So I'm starting with SPY 6-month daily view. Same story, different week. We've managed to push another high for this week. We came very close to the target I mentioned last week of around 110. We were short by just a few cents. So looking at the price action, we've been up, I would say, pretty much almost every single day, except on Friday and a few days before that. But other than that, the market just keep chugging along. It seems like the market wants to kind of take a break a bit. On Friday, we saw some profit taking. However, it managed to stay above the previous resistance around 108. So right now, it's going to act as support. So 108 will be your immediate support. So looking at the stochastic and looking at the MACD, we've been seeing divergence all over the place. Daily stochastic is starting to get into an overbought. The last time we were overbought, we managed to do some kind of a pullback to relieve out of that overbought. So if that's the same situation, then I would expect some kind of consolidation, not necessarily a pullback, but somewhat of a consolidation correction to be occurring relatively soon if it haven't already started on Friday. So if that holds true, I've already mentioned that 108 would be a very good support level to look for. But even if you go further down the price levels, it seems like there's a support almost at every single dollar interval. For example, at 107, previous support here, and then there's definitely a very nice support gap right around the 106. And then again here, somewhere between the 104 and 105 areas, 104 and a half, there's another gap. So there's quite a few levels of support zone developed already by the bulls. So if the bears want to take this market lower, they've got to punch through all of these levels. So it's going to be somewhat of a tough battle between the bulls and the bears if we do get some kind of consolidation or correction coming on. And as far as upside resistance, we've developed a new resistance level somewhere around the 109.50. And of course, the 110 level is still my target, even though we came very close on Friday to touching it. If there's any more upside, I would shoot for 112. That would be the next level of target that I would aim for the market. Okay, next going into the VIX, I mentioned last week that if we get any kind of breakout above, then we would see more bearishness into the market. Any breakdown below the support, we would see more bullishness, and it seems like the market definitely wants to go more bullish. So we made a new high in the VIX, which correlates with a new low in the VIX, which correlates with a new high in the market. So we are seeing some correlation in terms of bullishness and a drop in fear and a drop in volatility. However, even looking at the stochastic for the VIX, we are oversold, which more or less corresponds with the overbought in the market. So if that does mean anything, we probably see the VIX trying to relieve itself from oversold by bouncing higher, maybe probably retesting this previous support, now acting as resistance. If that holds, then and it shoots lower, then that tells us that there's more bullishness to come in the market in terms of trader sentiment, in terms of greed and fear. Less fear, definitely more greed if the VIX goes lower. Overall, just to recap, there's really not much that I can say that I haven't said already within the past month or so. The trend is still up. Okay, so you always want to go with a trend, despite what you see with all the indicators, despite what you see with all the longer term indicators. Yes, there is divergence. Yes, we are overbought. Yes, we are very stretched out. Right, we had a tremendous rally, but the market keeps continue going higher. So you have to follow with what the price is doing and not so much with what the indicators are doing. All the indicators are telling you is just be cautious. I've said this several times already. Continue to go long, but do so cautiously because at any moment we might hit that top where that is the ultimate top and the market will start turning south again. So watch your longs. I definitely say it's due for some kind of correction after a couple of weeks of strong moves. So either a sideways correction or some kind of pullback to all those support levels that I mentioned. Just watch for those levels next week.